Welcome to the channel. Today we are going to talk about the FMCG results of Q4 and review all the companies right from HUL, Nestle India to Marico. So FMCG is typically seen as a defensive sector where it gives you a lot of stability to your portfolio. Uh, but this quarter, the story is a bit different. Growth is muted, rural demand is yet to fire on all cylinders, and even premium urban segments are struggling to grow and showing signs of fatigue. At the same time, input costs are coming down. So inflation is at a 5-year low. It is helping margins. So is this just a temporary slowdown for the FMCG sector, or are we entering a more competitive low growth phase for the sector? So let's break down the key numbers and see what the management commentary tells us and what you as an investor should watch for in the upcoming quarters. So let's go deep into it. So if you look at the industry, right, some of them have come up with results while others are still coming up with results in the next few weeks. So HUL India, in terms of estimates, the sales growth was not expected to be good 2.86%. Whereas in terms of actual results, it was 2.4%, less than estimates. So profit growth was expected to be minus 2.5%, whereas it is 3.6% YoY, which is a bit better, but still it is not a great number and stock fell a lot on that day. The volumes have also come down. QOQ also, the numbers are very bad. ITC is again expected to show muted number, 6% sales growth, minus 3% profit growth. Result will be announced next week. Nestle India also came up with bad results. So the expectation was a 5% sales growth and a minus 15% profit growth. So sales growth was below estimates at 4.5, whereas profit growth was minus 5.2, which is better than estimates, but still it is a very bad result for these FMCG giant. Britannia was expected to show 7.72% sales growth and a minus 3.5% profit growth. So it beats estimates. So sales growth was 9%, profit growth was 4%, primarily due to the raw material prices cooling down. It has helped the company to improve their margins, but can they sustain is a question mark. Godrej Consumer sales growth of 6.9% was the estimate, and the profit growth of minus 1.5% was estimated, whereas it surprised everyone and the results are beaten estimate 6.2% sales growth. Though the sales growth is slightly less than estimates, profit growth has been phenomenal. They were in losses in the last year. Now they have come up with very good numbers. Let's look at the next company now, which is Dabur. Dabur was expected to have a weak quarter. 0.46% sales growth, minus 6.5% profit growth, but the result was even worse, 0.5% sales growth and minus 8.5% profit growth. They are struggling even in overseas markets. So Marico is the outlier in this entire segment, which has come up with very good results. The estimates itself were very high, 16.89% sales growth expected, 7.7% profit growth expected, but the results beat estimates, 20% sales growth, 8% profit growth. The stock has been rallying over the last 2 months, right from some of these indicators have come out. So the company is now close to a very high price point, but still they can continue to show very good growth. Colgate is expected to show muted numbers, 2.8% profit growth, 2.33% sales growth. Typically, it shows results in the high single digits. So results not yet announced. We have to wait for it. So the next one is Tata Consumer. Tata Consumer has beaten estimates. So 15.97% sales growth expected, but 17%. The surprise factor was the profit growth. So they were in losses. They are expected to show losses, but they came back from losses to profits to huge profits. And eventually they had a 59% profit growth, which is awesome. Varun Beverages, so this company has been performing really well over the last 4 years, consistently quarter after quarter. Every quarter they have been doing well, and then it will beat its estimates in the next quarter. So this company is one good stock to keep in your watch list for long term. So sales growth expected was around 27%. They grew 29%. Profit growth was expected to be 31%. They grew 35%. which is really good. PNG is expected to show a sales growth of 8.5% and muted profit numbers, results not yet announced. Emami is expected to show a 12.52% sales growth. Profit growth, we do not have estimates right now, but it is again likely to be muted. Radico is one company that has been doing well in the liquor space. It is expected to grow at 15% sales, and its profits are expected to grow 78% YoY. So we are waiting for the results. This company is again very good. United Breweries, again, another liquor company which is expected to do well, 16.42% sales growth, 37.4% profit growth. Now let's look at United Spirits, 13% sales growth, but minus 20% profit growth. The results not yet announced. So if you look at this industry, overall it is muted. So let's look at all the companies that have come up with results. So if you look at them, so none of the companies except Marico has shown very good results. Varun Beverages has shown very good results. Apart from them, all others, right from HUL, Nestle, Dabur, Britannia, all of them have shown middling results, though Britannia results were better than expectations. The good thing about this industry is this is a stable industry. It keeps rewarding you with dividends. All these companies, though they correct, they always have a stability because they keep providing high dividends. This industry is basically a high ROE, high ROC industry. So there is a famous saying by Buffett: buy commodities, sell brands. So basically, the cost of making all these FMCG products is extremely cheap, and some of them do outsourcing as well. So they have very high ROE, like 70%, 80%, 100 plus percent. So these companies, the requirement of these products is also essential. Even in recession, you have to keep brushing your teeth, you have to use soap, you have to use hair oil. So all these things are extremely essential things which you have to use on a daily basis. So these companies always have a shield. They always remain highly valued. Whenever they correct, it is a good time to buy. And the most important thing is dividends. They keep rewarding you with huge dividends quarter after quarter after quarter, which will basically keep filling your wallet. We have another dividend investing series where we have mentioned how you can retire with the dividends and plan your stock portfolio. We are also coming up with another detailed series on the kind of dividend stocks to invest, and we are coming up with a dividend portfolio as well. So all these companies are good at providing you dividends. If you're looking for a safe bet, these companies can be purchased whenever they are available at a cheaper valuation. Again, the valuation will remain high, but compared to their past numbers, they may be cheap now. So overall, if you look at it, the industry experienced a 5.1% volume growth, primarily driven by rural markets, and urban centers have been showing slower growth. So this is the primary problem over here in this industry. So let's look at more data. So most results were tepid and below expectations. Mm, Demand rebound is expected in H1 FY26. If you look at the interviews of some of the top management people in these companies, they have been saying that there will be a demand rebound in the first half of FY26, aided by uh, inflation reduction and favorable pricing strategies. So rural markets continue to drive growth right now, and urban market continue to remain extremely soft. So input costs are cooling off. So as mentioned earlier, inflation data came out last Tuesday. It is at a 5-year low. Only in 2019 we had such a low inflation. So the prices are cooling off. So companies are able to improve their margins. For example, Marico and Britannia have come up with a better profit margins. So discretionary categories like personal care and premium products saw weak traction. So let's see what are the other highlights. So margin trends, though the inflation has cooled off, margin trends remain mixed. Some companies have shown higher margins due to lower raw material costs, but others keep facing pressure on their margins due to ads, promotion, sales expenses, marketing expenses, etc. So the margins are continuously mixed. Competitive intensity has increased. You see a lot of startups. If you look at events like Shark Tank India, you'll see a lot of companies coming out online, coming out across the country and doing really well. And India is moving towards a health conscious country. So people are health conscious. There is a famous meme running. So Amul, whenever they introduce a product, they use the word protein over it. Protein based milkshake, protein based powder, protein based ice cream. So people are becoming health conscious. So that is one reason why companies like HUL, ITC are facing huge competition, because they have been using palm oil and they have been producing low quality products which are not healthy for anyone who is consuming it. So people are moving towards healthy snacks. So competitive intensity is going up very high. We have to see if this continues to reduce their margin. But the good thing is these companies are truckloads of cash. If a particular product becomes successful in the healthy, for example, if you look at oil, right? So in the oil industry, we have been seeing organic oil coming in. So these companies have the capability to quickly launch those products and become successful and capture a huge market. Though companies can come in with the new product category, these companies have the capability to do that. So all these giants remain very good long-term opportunities whenever there is a fall. So in categories like edible oil, personal care, and packaged foods, it continues to remain high. So that is one major highlight from all these results cumulatively. So inventory destocking is happening in the trade channels. It affected near-term revenue visibility for many players. So the export and international business is struggling. So be it Dabur, be it Godrej Consumer, they do a lot of export. They've been struggling due to currency, geopolitical tensions, war, tariff. All these things are taking a hit on these companies when it comes to export. For example, Domino's, if you look at Domino's, they have a lot of restaurants in Turkey which may get affected because of the war. So the commentary overall, if you look at all the companies, the management commentary remains conscious. All of them have given interviews after the result. I went through all the transcripts. So most companies are not guiding for strong near-term growth. They are not saying from the next quarter onwards we'll see extraordinary growth. They've been cautious, but they've been expressing optimism. Some of them expressed optimism for H1 FY26, while many have expressed optimism for H2 FY26. So the now is the important question: is FMCG a good, still a good defensive bet? Can you continue to remain invested? Absolutely yes. It is a safe sector. It is a low volatility sector. So companies have strong brand power. It is not easy to dislodge it. People use the same toothpaste, same soap, same oil, all those things for on a regular basis. So the brand recall, brand power is extremely high. Pricing flexibility is there. They continue to have steady demand and they keep giving you dividends. They have strong cash flow, high ROE companies. The amount of capital needed to run these companies is minimal. They offer lower risk, stable compounding opportunity. The FMCG companies can be a part of your portfolio. So look at FMCG as a portfolio anchor and not as a high growth engine. So they continue to give very high dividends. So volume growth is currently being driven by rural recovery. So rural industry is mm, recovering a bit, which is a good thing, but it still remains inconsistent and it is vulnerable to monsoon and income trends. So we are expected to have an above average monsoon in India, which is a positive sign. So urban demand remains sluggish. It is impacting categories like personal care, beverages, and high margin SKUs. So while some companies showed margin resilience due to easing input costs, Revenue growth continues to remain modest. 2 to 5% is what we are seeing in terms of sales growth, which is mediocre. So the sector is facing a transitional phase. So waiting for broader demand revival across both urban and rural markets. So what to watch in the upcoming quarters? So sustained rural recovery is something that is important. It is a key monitorable that we have to keep looking at. Rural drives volume, especially for mass brands. Election outcome and government spending may boost rural incomes and FMCG consumption. So, monsoon impact. A poor monsoon can basically completely derail the growth of the rural areas. It can directly affect FMCG sales. So, premium product recovery in urban areas is not happening. It signals demand normalization in metros. So, how companies expand beyond core categories will determine their future growth. So, this video is for information purpose. Do your own due diligence before investing. If you found this video very helpful, hit a like button, share it with your friends, subscribe to our channel. The next few videos will talk about other sectors like IT sector, how it has been doing, banking sector, how it has been doing. We'll also come up with a new series on a detailed series on mutual funds and good mutual funds to invest. Keep watching the space for more exciting and informative videos. Thanks everyone. Have a great weekend. Bye.